Hello, how are you all out there? And we have quite a big crowd today and quite a bit content. And I struggle between whether I just draw it for you or I go with the PowerPoint. So what I'm thinking is, and I will go through the PowerPoint. If I really felt like it's hard to describe it, I will draw for you. But I did already made some draws, charts to show you. It should be really helpful. Let's just get going, okay? Today, remember our last Saturday, we were talking about the pros and the cons of sole proprietorship. Like if you're running business on your social security number or your IT number and your name, and then what's pros and cons, right? So today we're talking about corporation. And a corporation is a business, right? It is not LLC. It is not sole proprietorship. It is corporation. But within the corporation concept, and from the tax standpoint, there is a S-corp, there's a C-corp. And I will introduce to you, I'll give you this really very deep understanding from small business standpoint. Okay, so obviously, there's large business or S-corp, C-corp. I'm pretty sure they also leverage this part of the knowledge, but they also had much more to go for. For example, larger companies, they are S-corp, C-corp, and they use R&D credit and they use work opportunity credit, and they have all kind of things going on, field credit, whatever they were doing, they will have this government assistance program going into their tax return, help them to reduce the tax liability. But what we are doing here is that to really understand the difference, so to offer our small business owners, the people who cannot afford to go for accountant and legal advices, and come over here to get something, get yourself ready, and you can ask good questions to your lawyers or to your CPA, right? This is important. This is really not a warning I give you to say don't trust what I say. It is a warning I give you in general. And there is no knowledge on the internet. You should rely on that blindly. You really need to take your own judgment to it, study in your own way, and or pay for a professional service, so that way your knowledge is specifically for you. And those are important warnings, because a lot of times I would have clients who come to me and bring me a certain quote from the internet, which is opposite to what I was saying to them. And then of course they're concerned, because why, Ying, you're saying this and about the internet saying that? Oh, that's because the internet was like 10 years old. And so those are the timestamp and the policy change. Every time the president changes, the tax changes. It's like, that's almost like the bedroom beddings. It's just like they change, everything changes. So you don't want to rely on the internet. It's too temporary, too unreliable. No one has authoritative statement can make for you other than IRS. If we look at irs.gov, even their knowledge, their posting is changing, right? So they keep on clarifying things, and that was not clarified. So things will change and shift. So make sure that you take that responsibility to yourself and really affiliate yourself with businesses or CPA firms or individuals like myself, and affiliate yourself with them and becoming friend with them, and let them understand you by first name, and then really build your business network. That's how you do it. All right. Okay, so now let's just look at this common business entities. So there's a common business entities in the business world here in US. I often get this issue coming up to me and saying that, well, I want to form a company, and I went to my attorney, they tell me one thing, and I go to my CPA tell me another thing. So who is the one knows the real stuff? Such a great question. And actually any of them could know the real stuff. And if the lawyer practicing in the business entity side and also understand the tax side, then they will speak the similar language with the tax preparer, the tax person. But if your tax person speaks certain language and that is really to the taxes, then of course they're not really considering anything else on the business entity. They're just focused on money. So I always say to folks that your tax preparer is like historians. I said that many times in my webinars. And your financial planner is your futuristic dreamer. They're the dreamers. They dream 8% interest for our investment. You know, what a lie, right? For the last 15 years, but all of our life insurance, everything was projected on 8%. So failed utterly. And I had a client with a full life insurance policy, and it was projected to be paid in full and done in 10 years. And this is already 22 years, they're still paying for it. So, again, financial planner, futuristic people, and your tax people is historian, and your lawyers, and they are none of these. What they are is they are there to resolve your litigations. So when you got in trouble and say you got sued by someone, your lawyer comes in, and that lawyer would need to be in the shoes of historian, and also you need to be in the shoes of present and knowing what exactly the law says today, right? So your lawyer really need to know all of these things from the back to the front. But your tax preparers, a lot of time is a historian. They don't really care about tomorrow. But Community CPA, we have attorneys on our staff. So we also have taxes. And I myself, I'll tell you that even though I claim to be really good with taxes, but I am not a historian only. I'm very futuristic as well. So I understand a lot of things related to the financial side. So I work with financial planners a lot, and knowing what they do and work with them, help them to make up a plan for our clients, right? So now I'm trying to say to you that when you want to start a business and you are looking at a business entity setup, I would go for your friend, whether that is attorney or is a CPA. And if your friend don't know both of the world, and then you rely on the CPA, because after all, the money is king, right? And if we want to, whatever we do, even going into business, I thought you were going to trying to make money. If you care about the bottom line, and then bottom line gonna speak, whichever way gonna save you more taxes, that's what entity you're gonna choose, right? So with that, of course, other consideration also important. Your attorney will tell you, but now I just answered your question. Whether you go for your attorney or your CPA, I say you go for the one that who understands you the most. You go for the one that knows your situation. And a lot of people who doesn't speak English and they're doing foreign investment, and they got this EB5 going on, and all of these foreign related tax issues, importing and exporting, and working in Mexico, and all of these kind of things. And a lot of them are here because we are the kind of firm understand the foreign part of the business very well, because we've been practicing on that area starting from the first day of the firm. In fact, in the very beginning, the firm started not because we do taxes, it's because we do foreign tax consultation part of work. So, all right. Now, going back, so what is a popular one in US? Do small business. These are the popular one. So proprietorship, partnership, and LLC, corporation, nonprofit. Got it? So next slide. This one worth of a Codex moment. If you just snap a picture, because this is going to tell you a lot. Okay, right here, the reason I show you the picture, I want you to see the popularities. So LLC, that's one. And S-corp, C-corp, nonprofit, you see that? And also 1040, of course, right? 1040, you are a natural entity yourself because you file 1040. Now, today, we are not doing any other things. We're just going to talk about C-corp and S-corp. And look at this chart, and we will come back to this chart again, but I want you to kind of picture The S-corp is above the line. The C-corp is underneath the line. Just remember this chart. Now let's go forward. So on the C-corp, C-corp is a business entity that is taxed separately from its owners. What does that mean? That means you could have a 1040 tax return. You don't have to wait for the C-corp corporation filing. You can just go ahead and file your 1040, even though you have a C-corp business going on. So they're separated. They're not connected, but they have a connecting point. The only connecting point between C-corp to your 1040, going back to the chart, is what? Is W-2 and 1099 dividend. They would go merge above this line to 1040. All right, and the C-corp and pays its own taxes. So true. And the C-corp will pay separately. So let's say if you are a C-corp business owner, you probably realize that you write a check on your personal tax return to IRS, and then your accountant calls you, goes, you have another tax return you need to sign and pay. You go, oh, I have to pay another set of taxes. Yes, you do. So that is the C-corp, because you pay C-corp income tax separately. Okay. And unlike S-corp, we'll cover S-corp and the C-corp. One more very important thing. It is that the shareholder of the C-corp does not need to be you, does not need to be Ying with a social security number, does not need to be you with a social security number. So you will be like, oh, then who's the shareholder? What do you mean? It can be another company, and it can be a trust. It can be a non-person. Just keep that in mind. That would offer you flexibility in tax strategy and the planning. Okay. And C-corp tax return, okay? We file C-corp tax return, and this return is due on April 15, just like 1040. Just like 1040. And the C-corp has its own tax rate, right? So right now it is 21% on everything, flat rate. So let's say you made $10,000 net income, and net income is showing up right here, taxable income. Then you will pay 21%. So you probably will say, is that all? Is that all? No, it is not all, because every state would have a tax rate for the C-corp, okay? Every state. So here, I did a snapshot for you right here. So let's just look at Iowa. This is where I am today. See, Iowa has a graduated C-corp rate. So the maximum is 9.8%. But in Minnesota, that's where we have another office. Look at this 9.8 period, and they don't have these graduated. They just 9.8. Then let's look at California, where we have where we had our office building, but we haven't really started operating there yet. See, California is 8.84. Okay, and a lot of our folks, when they come into taxes, and they only remembers the taxes that they pay on the personal side. If they have a C-corp and they don't remember, oh, that one, I have to pay taxes. Really? Yes, really, you do have to pay taxes. So when you do the tax planning, folks, and you would consider in all of these, right? And a lot of folks would come back to me, goes, Ying, what's so good about C-corp? Because I am actually have to pay double taxation. And I verified that on internet, and it says double taxation. So what is the thing getting doubled in C-corp? And I'll explain this to you, okay? But in the C-corp, and even though, put aside on the double taxation claim, the rate, 21% plus the state rate, is still much lower than your personal income tax rate, which is your S corporation going to use. And the S corporation don't have a separate tax rate. They use personal tax rate, right? So that is what the top rate is 37. Okay. On each state, it will be different as well. So you pay state, you pay the federal. So with that, you want to calculate, is that really beneficial to be in the C-corp or to be in the S-corp? So now let's look at the summary of the C-corp pros and cons, okay? The owners are separate from legal liability, so they're not entirely responsible when faced with legal issue and debt. It is so true with our President Trump, because President Trump's organization is C-corp. So when it's filed bankruptcy, is very legal, is very separated. It is a company that filing bankruptcy. It is not his personal bankruptcy. So C-corp bankruptcy is different from we or a person file bankruptcy, okay? And you can bankrupt the C-corp, but you yourself still making millions. So yes, that's possible. And if you raise your hand, goes, no, really? Yes. And of course, to be a C-corp, to really be in that position to separating your personal doing from the company, and you want to follow the regulations and rules, right? So that's why there is more paperwork related to corporation, because you have to identify the separation. You can't be using your personal checkbook, writing business expense, and then business deposit come in, is all went to your personal account or your spouse's account. Then later on, you decided to file bankruptcy on the company, and then you go, yeah, we are a separate entity. No, because your transaction was so commingled, and you will fail that test, and you will not be recognized as a C-corp, even though you filed a C-corp tax return. All right. Then the second point is ability to sell stock, which raises the likelihood of acquiring financial capital. Yes. In C-corp, what that means is, let's say I own 100% of C-corp shares, okay? And I can evaluate my C-corp, goes, oh, my C-corp now worth $1 million. I'm going to sell my shares, and I have 1,000 shares, so I divided 1,000 to $1 million, and each one of them is going to have a 10,000, right? So you will take the 10,000 and you will sell it to me. Ying, I want you to be part of my company, and I can sell you, some shares. And you already have the price and you can sell, okay? That made it very possible. Then I was putting the money, you got your capital, right? And of course, with a C-corp, even when you do this type of transactions, and you will follow the legal advice from your attorney, and sell the share properly, sell the share with documentation. And if you are doing private placement kind of capital fundraising, then you want to make sure that you work with your attorney, getting your prospectus and the things like that in order, so you can actually get people to buy your shares, and then you accumulate capital. And you also don't need to sell the shares like the one you have. You have the one that with a voting right, you could sell the share something else. Sell, not diluted, but sell the different class of shares. So the class difference can be defined, right? You can decide on what's the difference between the class. Maybe one is voting, the other one is not. See, these are legally stuff. And this is where when you are selling stocks, you need the price from your CPA firm. You need the documentation coming from the law firm. All right. And a well-established structure with clearly defined roles, accountabilities, and agendas. So C-corp is a very mature corporation structure. And really in terms of your liabilities and what shareholder is responsible, it is well established. There's a lot of cases you can referring to know that whether you are in a good position or not to get away from certain liabilities or to claim certain benefit, right? And the employee may also have option to buy stock at a fixed price and then receive the stock benefits. like, those employee stock options. So when you buy the so long ago, and Wells Fargo has that. I don't work at Wells Fargo for many long 10 years, so I don't know what they have right now. But a long time ago, what they had is you can buy the shares. Once you qualify to buy, means how many years you are in the company, then you can buy the shares at that fixed price. So let's say it's $50, and you bought it in that price, but the market was trading at $80. Then you can sell, and at a certain point of time, you vested your benefit, you can sell that. When you sell it, you paid for 50, but the market is trading at a lot higher, then you have the benefit of the capital gain. So does that make sense? So C-corp can do that, especially if it is public traded. And a lot of times the employee has the option to do that. And if it is not public traded, can you do that? If it is not public traded, you don't really have the market price immediately available, but privately held corporation can also do that by providing valuation every year to the employee. And then they know that, oh, our share go up, our share go up. So if they want to get their share back or they leave the employment, they can actually get paid for the difference, right? For the shares they have. So there are a lot of things you can do inside of C-corp. And one other things I want to mention to you is the C-corp, why it is called C-corp. I know people will tell you that, what do you mean? And then let me teach you something new from my invention. And I call C-corp a capitalism corporation. Capitalism corporation, because it is designed to benefit the capitalist. Okay, capitalist is who? Capitalist is the owner. I'm not saying that all the owners, capitalist has such a negative sound or sensation back to it, but not so. Capitalist is simply the one who owns the shares. Okay, and so in this case, what I want to say to you is the capitalist is the one going to benefit from C-corp the most, because you can design that to happen inside of C-corp, like defined benefit plan and pension plan, all kind of things can be designed inside of C-corp and it just benefit the capitalist. Okay, and then since we're talking about corporation, you may say, Ying, then what about S-corporation? The S-corporation also have a nickname I give. It is called the Socialism Corporation. That's why it starts with S. Not true. Not really. Not what IS was doing. It's just sub-chapter of S. That's why they call them as small business corporation definition. But to help you remember the difference, I want you to know that S corporation stands socialism, because everything you do in S corporation, if I use a very silly example and say you are the owner of S corporation and you decided to buy yourself a car and to drive for the business, and so business pays everything for the car, and in the S corporation, and the extreme correctness would be that anyone in your corporation who works like you full-time or whatever, who are meeting that condition will have a car in order you, the business owner, to deduct it. So that is where the socialism concept come in. S corporation is really meant for small business owners to really be fair, to be fair with your small group of people, and you share the benefit. If you want to deduct the benefit, that has to be shared. If it is just for you, not for other people, then you cannot deduct it as business expense. But in C corporation, there are benefits just for the capitalist and not for the employee, they can deduct. So this is where the difference between why I call it capitalist corporation and the socialism corporation, right? All right, so going back to this chart again, folks, let's look at it. Now, we sort of talked about C-corp, and with this one, and we talked about how C-corp is paying taxes on its own, so it's not related to 1040. you see how the S corporation has a solid line here. A K1 goes to 1040, but C corporation don't have a solid line. What they have solid is just the W-2 and 1099 dividend. W-2 is when you pay salary to the owner, to the capitalist. Then they get W-2 and they file on 1040. And if you distribute dividend and you give to the person, the owner, then the shareholder, then they will report that on 1040. So let me just expand your thought right here, folks. What if the C-corp shareholder is another company? Same. So the other company would get dividend. Of course, it will not get W-2, right? It's not a person, but they will get a dividend income. It will be just going into that company. That company will report that as other income and pay taxes. Maybe that company is S-corp. Then it will issue a K1, goes to 1040 of that owner, right? Or maybe it is another C-corp. Then you will just pay taxes there. Got it? So C-corp paying taxes itself only when they spit out the leftover retained earnings, they would have a tax issue, which is called double taxation. So I said that only if, right? So if they don't distribute, they don't have double taxation issue. They only have this double taxation when it came out. All right, let's talk about S-corp. S-corp is a corporation, and it's a corporation that state do not recognize, every state. So at the state level, they only know you are a corporation. That S-corporation concept is a federal concept. So the state just goes, okay, you form the corporation. Then you elect that to be an S-corp at the federal level, right? And then when you file taxes, it will be flowing through. The state just created that tax formality for you. So you have your S-corporation flow through. But that's not a state concept, it's a federal government concept. The election to pass corporation income and losses to the shareholder, that is the S-corp. So the S-corp goes, oh, I'm a C-corp. And now I want to pass my income to, to myself. Then you do an S-corp election, right? So that is where the S-corp is. S-corp is an added measure of C-corp. So what is the added measure? That's the election. Shareholder of S-corp report the flow-through income and losses on their personal tax return and are assessed taxes on the personal tax return by using personal tax rate. So now people say, yay, perfect. So we don't have to pay taxes twice, because if I'm C-corp, when I take dividend out, I have to pay taxes. When I take W-2 out, I have to pay taxes. You are right, but I want you to do that calculation when you have a situation where you have a C-corp and then you want to turn it into S, and you think that this money would not pay double taxation, so let's go to S. Be careful, because the rate on personal tax is so much higher than corporation. 21% versus 37%. Is that really a good deal? Or maybe you don't know. And that requires a mathematician. In my firm is really interesting. I really enjoy working with mathematicians. I have 2 people in our firm are literally mathematicians. They are mathematicians by trade, but they are here because they are the one with very strong logic. And when we talk about calculation, it's not like they use calculators. No, that's the logic with the computerized technology. So that's where you really need to do that calculation. If you just have a calculator, fine, you can still do it, or you have your professional to do that for you, but that calculation needs to happen before you draw any conclusion. Okay, now qualification to be S-corp. Not everybody can be S-corp. And if you're saying that, well, I'm a 18, I have 18. I don't have social security number, and I'm not legally authorized to work here in United States. And I'm a shareholder of SCorp. If we see you coming through our door like that, we change you because it's not right. You cannot be a S-corp shareholder. So now let's read this thing. So to qualify for S-corp status, a corporation must meet the following requirement. Be a domestic corporation. What does that mean? U.S. corporation. You cannot be like corporation from overseas, right? A corporation incorporated and operating in U.S., then you can be S corporation. Okay. Now, have only allowable shareholder on board. So who are allowable? Maybe individuals, certain trust and estate, and there may not be partnership, corporation, or non-resident alien. Look at that. So generally speaking, has to be a person with social security number to be a shareholder. Of course, if you have a trust, you know, trust is viewed as an individual as well. And estate, of course, estate, someone died and, you know, their tax affair is not done. So their tax return, their thing is called estate. You can make the person came back to life. So basically a person's 1040 and switch into estate because they pass away, right? So again, it's individual. And then you cannot be a non-resident. And you cannot be the one that holding ITIN because an ITIN number does not have authorization to work in the United States. And even social security number, not all of them are allowed to work in the United States, right? Have no more than 100 shareholders. Well, just a limitation. And, you know, Microsoft, C-corp, they don't have a limitation, right? You can buy their shares online. And so they don't have limitations. But S-corp does. And you may say, well, I can buy it online because I'm a preferred shareholder. Yeah, because C-corp allow you to have classes and S-corp, no, everybody equal. Remember, we're socialism. Remember? Socialism is not all bad, right? And certain socialism agendas, that's what we're doing today. And it feels like is equalization, but certain equalization is healthy to the society. Okay, so now with partnership, corporation, non-residents, aliens, no, you cannot be shareholder, 100 shareholder maximum, and have only one class of stock. All right, this is pretty cool, right? Now you know S corporation. How S corporation is taxed? First, the corporation is going to file tax return. Then each shareholder will get their K1 and they go to file their 1040. So when they file their 1040, K1 flow into their Schedule E inside of 1040, then they pay taxes. Okay, so right here, I want to mention to you, the S corporation K1 is not subject to self-employment tax, right? But if you have a 1065 K1, that's different. So there's two types of K1 often people see, and one is S corporation K1 is 1120 SK1, then 1065 K1, and just make sure you read that carefully before you know what to do with those K1 income, because 1065 K1 income can be charged with Social Security, Medicare, self-employment tax. It doesn't need to be, but 50% of chance they need to. But S corporation never will. So that's the difference, right? And pass through tax impact on 1040. The owner of S corporation pay regular income tax on their distribution, but they are not considered to be self-employed, right? So they pay no self-employment taxes. And if you want to ask me, hey, what is the self-employment taxes? Just make it simple, 15%. So you're not paying 15% self-employment tax. If any of the owner are also employee, they receive the salary, right? So their salary already deducted Social Security, Medicare, so that should not be an issue. And for S corporation, you also have this what we called 199A deduction, qualified business income deduction, QBI, 20%. We still have that. And there's no changes for that in 2021. So you still have your 20%. And many S-corp owners work in the business. Some try to avoid paying, salary to themselves. Don't do that, because IRS watches that really closely, because they know you don't pay Social Security, Medicare, self-employment taxes at the end. When you got the K1, you get away from that. So IRS want to make sure that the owner paying a reasonable salary. So you may say, well, Ying, where do you find reasonable salary? What do you mean by reasonable salary? And there's nothing reasonable, and salaries are always too low. And then you go on to DOL website, Department of Labor website, looking for prevailing wages. So that will give you an idea of your location and your occupation, and also the amount that normally people are paying. Employment tax saving for S-corp is a big deal. That's a lot of drive is coming from there. And so just illustrate a number for you. If you are S-corp, you got a distribution, you got a K1 for 10,000, okay? Then you are getting away from $1,520. You're paying that much less of taxes. Compare this 10,000 is made under sole proprietorship or made under LLC as an active member. All right, so that's the amount I'm talking about. And of course, as corporation tax return, you see that is right here. And we want to make sure that you know the date you select S-corp. Remember, S-corporation first is a C-corp. Then you just did an add-on to it. The add-on is to change your tax structure from C-corp being separated from your 1040. Now S-corp gonna bring all your losses and your income into your 1040, right? So you made that change, but that change is an election, right? The form of election is 2553 or 2335. I will mention that form later. So that form is here, 2553. So that form you elect, you would put in the date. So when that starts, that's your beginning of the year. So January the 1st, most often, right? And you have January the 1st as you're starting, and election is always going forward. So you elect today, but it's for January the 1st, 2023. But if you happen to elect today, and you want to go backwards to January the 1st, 2022, because we are already in February. It is retroactive election, and you can still do it. There is a special ruling for it, but when you do the election, you want to quote that ruling number in order to get you to retroact back to the date you need it. Maybe it's January the 1st, 2020, okay? So you can go back, but with a special consideration on your application. Now, this is the rate. I just brought in the single one, because remember the S-corp is paying taxes on personal tax rate, right? On personal tax rate. So this is a single personal tax rate. I want to just point out to you that if you got a distribution that is over 156,235. See the last line there, and your rate is at 37%. Remember how much was the rate we said about C-corp? 21. So it's very different. Now, pros and cons, and of course, potential tax saving that came in. That's the first. And because S-corp is not taxed at a corporation level, it can result in significant saving for shareholders. Why they say significant? Because if you are sole proprietorship and making, $1 million net profit, and you are paying self-employment tax, I know that Social Security has will top off, but your Medicare and the net investment tax is always going to come in. But if you are in the S corporation, you save all of that, right? You don't need to pay the self-employment tax. Of course, your net investment tax will come in as well because your income is high. And your personal asset, business asset, are separated. Yes, you're a corporation. So you're actually separated. Don't use your personal bank account to deposit your S corporation income. And really separating them, not just by what the lawyer did for you, and by your own action. Very important. Okay. And easy to transfer ownership. Why do they say that? If you ever decided to give company to your relative or sell it to another owner, it is easy to do as an S corporation because you are S, so you have percentage of ownership, and you actually is a privately held company, and you can decide how to transfer your shares and give percentage. And we have seen people doing the share giveaway to their children, and by the standards of the gift tax limitation every year. So those are good tax strategy and for small business to follow. And you don't have to hire business valuation folks to give you a value, then your accountant can do, right? And you just have to decide on what valuation method you want to use. You want to use income method, net asset method, equity method. So there's different method you can use, okay? So there goes your S corporation. Now let's mention a couple of things really quick. So fiscal year versus calendar year. This is a big deal because when you have a C corp, you can decide on your corporation years any way you want it. You can start in December, ends in November, and so any 12 months, right? So let's say if you just formed the C corp in this month, February, and you can file, you can say that it ends in December, so you're going to file taxes for the whole year, but 1 month short. So but you can also say that, okay, let's just make that beginning of the year, February the 1st. And so I will end my next year on January the 31st. So that is a flexibility for C corp, but not so for S corp, because S corp pass the income to individual, right? So it is much easier and much more consistent when you have S corp as calendar year. Then your individual 1040 is also calendar year. So your whole year income and the losses come into your 1040 that way. And S corp normally cannot have fiscal year end unless you apply to IRS for a good reason, for reasons like maybe seasonal reason, business reason. But you cannot just decide, oh yeah, I want my S-corp to be some different fiscal years. No, and you cannot. You need to apply, but C-corp, yes, you can. So that's fiscal year stuff. And accounting method. For both corporation, you don't want to default your business on cash method. So when we talk about accounting method, the reason it is important because on the income side, it depends on how much income you're going to report. So for example, if I'm on accrual, okay, and if I'm on accrual accounting, and when on December 31st, I issued a bunch of invoice to my client. I had like $20,000 income invoices I just issued. I didn't receive that yet, but I'm on accrual. That means I need to include my $20,000 receivable into my income because that's accrual. But if it is cash, I didn't receive, I don't count. Same thing with expense. If you didn't spend, it didn't go out of your bank on December 31st, you cannot count. But if you are on accrual and you prepaid something, and for example, you bought all your inventory, you already sold it, but you didn't pay it yet, and you're on 60-day, 90-day behind. If you are on accrual, that is your expenses you come in. But if you're on cash, you should not deduct that because you didn't even pay for it yet, even though you spent it, even though you sold it, right? So those cash method or accrual method are really important. And a lot of times when we talk to people and when we talk to clients, and if they transfer their accounting to us or tax to us, and we ask, and what accounting method you use, they don't even know what we're speaking. So they probably think we were speaking Chinese, right? And no, but this should be, if you have a corporation, this should be a discussion to decide on which one is the best for your practice. In general, I always tell my doctor client that for doctor clients, we want that to be on cash. Why? Because we don't want to deal with the insurance claims because they never come back in with a proper amount. So if we don't receive it, we don't want to count that as income. Okay, so, and the doctor's office typically don't have a cash flow issue. So they got the bill, they pay. So what's the point? We want to be on cash method. But what about supermarket? Supermarket should be on accrual. Now you say, why? I don't, income side, it is always cash. Sure, because you're a supermarket, people come in to buy things, they pay you, you're hardly going to have any receivable. So you're hardly going to include any income that you did not receive. You normally received all your income, but because you're on accrual, so your expenses can be accrued. So your inventory purchase can be deducted. Does that make sense? Not inventory purchase. I am saying the cost of goods sold, right? You know what I mean. So now accounting method for corporation is so important. I want to mention that to you. Now let's go back to our chart again. So look at these two, S-corp and C-corp. The S-corp feed into the 1040.K1. But of course, the S-corp can also feed W-2, right? Reasonable pay. So I'm the owner. So I got a W-2 from S-corp and I pay to 1040. I bring into my 1040 and I pay taxes for that, right? And then look at this dotted thing on top of the S-corp, like a little horn. This S-corp can be revoked back to C-corp. So you don't have to stay in S-corp forever. And if it doesn't fit you, you revoke yourself back into C-corp. And look at the C-corp. That little horn says you can elect yourself to be S-corp, right? And then, of course, you see those things here. The LLC can be elected to be S-corp and C-corp. Election, just a word in tax world we use for changing the status, changing the nature of the tax filing. So a lot of things are called election. Electing mark to market, right? And electing accounting method, different kind of method you can be using. All right. And so here, the next slide, and how to become an S-corp, I just want to quickly go through. And so, if you form the LLC to become an S-corp, and this is, this is the pros and the cons that I quickly listed here. I'm running out of time, so I want to go through really quickly. This is the form I was talking about. Path to S-corp. This is the magic form called 2553, right? You fill up this form, and then you will become S-corp. You do receive a letter from IRS to say that they received your status election. Okay, but when you do election for mark to market, you don't get a letter. I just want to make sure I clarify that. And the timeline for form 2553, I kind of briefly mentioned that to you. Okay, and when you elect to be S-corp, you're electing the future of the future year. Okay, if you revoke the S corporation, then you need to have all of these documentation available for yourself. So revoking is a little bit hard than electing by our experience. And one of the revoking I had done in the past took 6 years. Yes, 6 years. And then, of course, the most recent one was taking a lot less, but I do remember it took 6 years for a client to revoking that S election. So these two slides was related to the evoking. And so this is pretty much what I want to cover right now related to our pros and cons on the corporation. So a lot of content that I mentioned, and I know you will pick up here and there things that is relevant to you. Not all of what we talk about is related to you, but if something that really kind of bring a light bulb on in your mind, you want to work on that because that means a opportunity. And I always tell people that, you spend a lot of energy and counting your mileages and, saving your receipt, then you are not spending enough time to understand the big picture, where you really should be, which house you really should be living in. And you only cared about, buying some decorations for the home, but you don't care what home structure you want to be in. That is the wrong priority, right? So for business, when you start a business or when your business is growing so much, you need to decide or know, maybe it's time to change entity type, or maybe it is time to elect to be different entity, different tax treatment. So these are things critical for small business owners. A lot of time we say that, well, our small business owners has no resources. No, it is not because we have no resources. It is because we didn't know where the resources are. So here at Community CPA, we are your resources. We actually will provide you with free knowledges as right here on the internet. Our channel name is Community CPA, and you can always check to see what we say, what we talk about, and that gives you an idea what is important. So we already done pros and cons for sole proprietor. We just did today pros and cons for corporation. And we are going to touch on pros and cons for LLC and a partnership. And I will tell you the most difficult section of understanding of these entities are actually LLC and a partnership. It is not even sole proprietorship and not even corporation. And I hope you learned some. And it's getting a little too serious, right? I didn't even sing any songs today, but I hope you enjoyed it anyway, right? And let me know what else you would like to hear. And I saw the input from the YouTube channel, and the people tell me what they want to hear. And if you put there, I promise you, I don't forget. Sometimes I didn't do it just because there's more pressing issues that people asking. We have 10,000 some clients. We know exactly the pause of business community. We know exactly what people are doing, and based on the clientele. So for small, medium-sized business, if you are between 0 and 100 million, you are our client. Just know that we are the best to really know what you're thinking. And give us a call, and we welcome you to join Community CPA and subscribe to our Community CPA channel. Goodbye. So good to see you.